Everyone, welcome. This is a live analysis with HFM. So a bit of a midweek briefing in this um, in the final trading week of the year. So let me also have my charts on. I forgot to share that. Brilliant. So we're good to go. Okay, actually, I don't know if you prefer that, guys. The Vigenius and George were streaming live also in social media. So just saying, in YouTube, Facebook, LinkedIn, Twitter. Am I missing anything? No, I think that's it. And go to webinar, of course. So you're also streaming in all the social media. Yeah. So as I said, it's the very final week of the year, right? Trading week of the year, to be more precise. Just a quick reminder that on Friday, we're going to have an early close from nearly all the major exchanges and markets in the world. So London, London, Nasdaq, New York, sorry, Japan. So because of the long weekend ahead and the Christmas holidays. So have this in mind, and that might explain some low volume signs that we're seeing in the market. So and that is usual something that does happen in these very final 2 weeks of the year. Some thin volumes into the Christmas holiday weekend. Markets are closed on Monday. Okay, just a bit of a briefing. With Europe and Asia markets remaining shut in Tuesday as well. Okay, so a bit of a briefing of what happened so far this week. Um, as you know, we had a big surprise, mainly by Bank of Japan, a hawkish turn, not to its policy, but by amending or tweaking, if you prefer, the its yield control. But it was a different kind of a hawkish stance. That's why I'm sharing the dollar yen over here as a very first asset to cover. Obviously, as we usually say, this is your session, so feel free to stick in our question box or in the comments. Below the social media live streaming, anything that you want me to cover, anything that you want me to explain, um, any question that you have in general, fundamental, technical, etc. We are here for you anyway. So let me just have also I need to pop up the question box and have the chat on. Oh, questions already. Okay, hello. I'm afraid I don't speak Arabic, dear. So I will appreciate if you if you could translate it, or I don't know. Um, what instrument is this? So Salman, this is dollar yen. I had it in weekly chart just because I wanted to show you this continuous drift that we are facing since the beginning of October, and I wanted also to show you that this week, just this week, we are still on Wednesday, right? We had this big weekly candle already, but then we had an over, and the asset it has finally broken. So it remains to confirm that indeed it will remain below the 50-week moving average, but it has broken the 50-day moving average. So it will be significant to see whether it will actually remain below it and continue falling below it further. So we had really, so the theme of the week, if you prefer, is a strong yen after what the Bank of Japan did. So it's shaken the markets for sure. It led to some cash flows into the yen, into the Japanese yields as well. Even though it doesn't necessarily mean that they suddenly got more attractive. I mean, for investing in comparison with the U.S. Bond market, but government bonds. But that twist definitely has uh, uh, turned the attention towards the Japanese market and the Japanese yields. 4 hour, where did we see gold? Okay, okay. Thank you for putting on your. I wish you win the prize as well, Emma. Good luck, everyone that is participating in our contest. Guys, before I check your asset, I would really like to see a bit in detail the dollar yen. Okay, just because we have seen a lot of selling of dollar for the yen. Okay, after the Bank of Japan, as I said, it's still a hawkish stand, but it's not something that Bank of Japan is usually do, and it prompts a lot of speculations that Bank of Japan might eventually turn away from the negative interest rates in 2023. Whether that will happen or not, who knows? But it's some signs that we're getting from this, from what they stated in on yesterday morning. And just a second. So, as I was saying over here, I'm going to zoom in the daily chart. The green line that I have over here is a significant support area, if you prefer, because it's the floor that we have seen for 6 months. Okay, it's a floor that has been sustained for 6 whole months from the mid. So in general, in the second half of the year, you see, this is June. The beginning of June starts here. So we have somewhere like the very first week of the year, it broke that level. So this level from resistance has turned into support. It has been held since then. So this is an important level to keep monitor, and it coincides. Not exactly coincides, but really close with my 50-week moving average. Okay, over here you see 50-week exponential moving average over here. So that makes it even more important to be closely watched, because if I zoom in again, you will see that the 50-week moving average was a key support for the asset for 2 years, 2 whole years. So that's why this drift lower, the breakout of 50-week moving average, the retest of this floor are something that, as we moving into the new year, into the end of the year, is something that you should keep an eye on. That could a break. Let me just zoom in. A break and further decline, proving that there won't be any. That is not just a correction of this long-term uptrend for the dollar yen. That could be a sign that the dollar yen is turning down to 125 or even 120 territory. Okay, we have a long way until then, but it's a key floor, it's a key bottom that could lead to fresh selling that could attract more bears if indeed we have a confirmation of a breakout, okay, and further depreciation of dollar yen. So we have a pretty strong yen this week, as you already know. So now let's turn a bit in a lower time frame to see the intraday technical analysis as well. You can see that after the Bank of Japan announcement, and after bottoming to 130 territory, we've seen a bit of a lower volume thin trading, as we call it, people are going to holidays and etc. So a lot of consolidation, and this is something usual. Okay, this is something usual in general in the markets these days. Okay, so there is a really flat intraday and um, sideways outlook, at least from the technical perspective, in this 1 hour chart in the intraday setup, with, however, the momentum remain negative. You can see that MACD and RSI are negatively configured. Stochastic, it's showing some kind of a boost, a bullish bias, but not significant. The slope is quite weak. So neutral to negative outlook is the picture over here in this intraday short-term dollar yen chart. So okay, let's just, before I close the section of dollar yen, let's just find some immediate support and resistance levels for you to be aware. Okay, obviously it's the Bollingers, as you can see, it's the edge of the Bollingers, of these 1 hour Bollingers. That is only for the 1 hour chart. So immediate support and resistance levels for any kind of intraday or within the day breakout, move higher or a drift lower for the dollar yen. So these are the very immediate support and resistance levels, with 130 with the Bollingers being used as our upper and lower barrier, if you prefer. And actually they coincide also with fractals, so that make it quite important. So to the upside, the next level to be watched could be the latest up fractals as well, 133.70 territory and around 133. To the bottom, if we see decisive move lower, then that might be um, further dip, breaking the 130 territory. Now, just as we're moving into the year's end, I mentioned that this is a significant important support level, which, if it breaks, it takes us back to the next floor for 2022. That was 125. This is in the case that we see a renewed strong selling pressure on the breakout of this level. Okay, 125 is the support that has been seen in the second quarter of the year. So somewhere between uh, sorry, April to June. Okay, so if there are no further questions about dollar yen, I will move on. Yes, I agree with you, Salman. That's the case so far this week, and in general since the end of October. So that's a strong yen against dollar. And we have seen a lot of the biggest movers these weeks have been all yen crosses. So dollar yen as well. So let's put the daily charts on. So you see, the yesterday's candle for Aussie yen, it was massive, absolutely massive. Rejecting completely the 200-day moving average, rejecting this October-November floor, extending lower, look like a free fall. But the interesting part is that it stopped exactly where it was April's bottom. Okay, so but we have seen a significant sell-off of Aussie yen over here. So that's a nice level to be monitored as well for those that are interested in the overall trends. And you should be interested in the overall trends, guys, because it's the end of the year. So you need to review your charts in the beginning of the year to see the overall trends, to figure out the trends, the long-term trends of each asset, because at the end of the day, even if you're a scalper, even if you're, I don't know, a hedger or something, it's always good to be on the same side of the trend, right? And to be aware of the long-term outlook, because this will help you to take more wise, I could say, decisions, okay, regardless of what kind of trader you are. So the long-term trends matter. It's always good to do your homework um, and and be aware of what's going on. Okay, so okay, let's move on. 187.15 is the floor that it stopped. Sorry for laughing. Stuart was leaving, and I was trying to put him some signs about happy holidays, etc. Sorry, I just want to know by yourself. Okay, Taris, I'm sorry, I cannot say that. I'm not allowed, because we are a regulated broker. We are not allowed to say what you have to do. Anyway, I cannot tell you buy or sell because I don't know what time frame you're speaking about. Are you in a 15 minutes chart? Are you in a daily chart? Are you in a 1 minute chart? So anyway, I cannot state without seeing what you are actually trading, how you are actually trading, what strategy you have, what kind of um, trader you are. But I'm sorry, guys, I cannot give any advices based on the regulator. I can help you seeing the overall picture with the technical fundamentals to help you figure out whether we have more bullish or bullish or bearish bias, but cannot advise. I kind of agree with Salman, but you are a bit hard. You are a bit tough. Um, Definitely needs a lot of study, needs a lot of learn before entering the money, especially with your own money, especially with your savings. And we know that we are into a global recession, so things are getting tougher and tougher. So homework it is. It's like a job. Every single job. I'm keep saying that it's business. It's if you open a shop, you need a business plan. The same stands for trading. If you're risking your own money, and especially if it's are your savings and you're not like rich and you don't care, and you want to do it like professionally, in order to gain money, then unfortunately study is the very first thing that you need to do. Study, practice, 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 practice in a demo account, and then go live. So important, guys. At the end of the week, okay, next week, as I said, Monday, Tuesday, US and Europe will be closed. So you understand that this kind of volume will not exist. There will be very, very small, tiny candles. But this gives you time to prepare for January. Okay, also have in mind that January is very, very significant. Theoretically, or based on the seasonality, if we are in a if we're in a bullish year, I mean, where we have growth in the economic growth and etc. January, if January is bullish as well, is strong, that indicates that we're going to have a very healthy, a very good year, bullish year. But during a recession, January is very significant to identify whether we're going to have a bear market year or not. The same happened. Happened in this year, 2022. If you go back to January, and for example, check the S&P 500, you're going to see that it drifted significantly. The US stocks drifted significantly in January. That was the very first indication that we're going to have a really, really weak year for stocks. And as a consequence, a reverse correlation with dollar, so a bullish dollar performance. Okay, that's in the past, sorry. we're gonna do more on live analysis into January, so we're gonna help you with all this. But okay, that's the case right now. If we are done with dollar again, I'm gonna keep moving and going to gold and S&P. I'm gonna go with them again because she mentions stocks, and stocks are really key, especially in December and January, because we have seasonality. Whether that will happen or not, who knows? But it's good to monitor it because it will help us. It will help us to figure out in what kind of market we are and what kind of market we could expect for the whole year. January is key for making, okay, I shouldn't say the word prediction, but for giving you a hint for the whole year. And by being aware of that for the stock markets, that helps you with the dollar, with the currency pairs, with metals. There is correlations, right? There are correlations. So I know you are asking about a 4-hour chart, Emma. Let me firstly go through the daily chart. So a correction in December, correction, but a good support, a good it held gains. Let's say it held its gains. Sorry, so it remains above the 32,000 territory, but that is where over here you see correction. I think that should be around the 23%, 30% of the rally that we have seen in the final quarter of the year. That's a bit a weak top. That's a stronger top. Yes. So consolidating between 23 and 38% Fibonacci level, and zooming further, my 250-day moving average. Okay. So everything points out over here from the technical side that the Dow over here, it will remain sideways. So possibly bouncing between the 23, which is around 33,500, and 32,500 territory. So consolidation is the theme currently. However, a move back above the 34,000, not the 23. 23% is a very weak Fibonacci level. So I'm taking it higher to the 20-day moving average, and I will round it up to a round number. Round numbers are key, are psychological level. They're considered more important levels to be watched rather than any other technical level. So a move back to 34 and above 34, that could mean the resumption of an uptrend again. But okay, weekly chart, just to show you something. We remain, okay, the asset remains, the stocks are general, remains at the remains so with the, let's see, I'm trying to find out the beginning of the year. The beginning of the year was here. Perfect. It has, as you can see, stock markets, the US stock market, even though they had a really deep, sharp, significant drift in the whole year, they managed to recover significantly. Okay, but there are a lot of risk for stagflation, a lot of risk of recession. Okay, in the US is a bit mild compared with the UK, with Europe, and etc. But even the mildest recession, as long as we see the Fed increasing rates until it stops, as they said, at 5%, that could provide this ceiling to the stock markets, and in this case, the USA 30. So it keeps a ceiling. Okay, we might see the ceiling being broken as soon as the Fed sounds more dovish and clarify that, okay, we are at our peak, we're going to stop hiking. A quick reminder, on the 15th of January, we have earnings season, okay, in which we expect the majority of the companies, actually all of the companies excluding the ones that they are energy related, petroleum companies, etc. We're expecting to show how much they have been affected from these aggressive interest rate hikes. So we are expecting to present further slowdown, even worse than what they posted in the third quarter earnings. So that could eventually push the US indices, Dow Jones, S&P 500, etc., back lower to the 31,000, 30,000, but we need to see that that interesting this range, to exit this range, to break the 200-day moving average. That's a long-term fundamental analysis. Let's move on to Emma's question, who patiently waits for me every single time and to do some technicals intraday. So intraday, oh, let me just clear all this mess. Cool. Well, that's the 4-hour chart, Dow Jones 4-hour chart. Okay. So what we are seeing over here, a big drift depreciation from 35,000 down to 32,600. That doesn't look like a wedge. We have a move higher. I cannot spot any kind of how we call it, pattern. Sorry. I can see though that my Bollingers are like squeezing. So that's an indication of a sideways move. Is the low volumes, unfortunately. And you see RSI also flat, my dear Emma. Not very promising over here. The fact that it keep failing to move above this level over here, my latest fractal, the 33295. Let's round it up. 33300. Okay. Yeah, you see, one day, sorry, one session, two session, three session, fourth session, failing to move above this immediate resistance level seen with this latest up fractal over here. And the flat RSI over here, but I'm going to put stochastic and my precious MACD as well. So it's my favorite indicators. If you want me to have a different indicator, because it's the one that you might use, let me know, okay? If you prefer different indicators, by the way. Never ask for that, but yeah, if you want, let me just let me know. I prefer the reset for the 4-hour chart. So we are having, okay, the momentum is, the negative momentum has detected a bit, but signal line is well below it. So there is pressure. Stochastic is overbought, but didn't really cross below 80 yet. So yeah, my dear Emma, mixed pictures, mixed signals over here, but what is certain is that it fails to break the 33,000. Remember, we need to see a 4-hour candle closing above it in order to suggest a breakout. If it's just testing it and closing below it, that's not a confirmation. But what it looks like is that there is a floor over here, a ceiling over here, unable to be broken, and the oscillators over here are neutral to negative. So there is more pressure than advance over here. Even if it breaks the 33, we need further in order, we need to see more boost in order to suggest a reversion of this drift. You see that? We are still at the 23.6 Fibonacci level. Yeah, it needs to move on my Fibonacci extension 161 at least. And that might not be something that will change again the negative bias over here. It will not alert the recovery of the Dow and the return to last week's peak. Yeah. So let's move on. Dollar yen. Hello, Turkey. Hello, Fogus Erba. Hello. Please, could you break down Kiwi? Yes, Kiwi was the biggest mover this morning. You are absolutely right. Antipodians are also are always like correlated strongly with China and Japan. Is Asian, etc. Are antipodians, commodity-related assets, and are really affected. So Kiwi was one of them. It was one of the biggest loser, but it hasn't. The picture hasn't really changed, my dear Werner, since this morning. It's stuck. So after drifting overnight, right? It actually found the floor. That was the European Open that I put on, and it found the floor since then with moving average, intraday moving average. I'm in a Kiwi 1 hour chart. Okay, so found the floor at 6280, 6280, but the overall picture remains negative if this is what you're asking. So if I zoom out and go to the 4 hour chart, okay, just to have a correlation, there is something very interesting over here. Something like a descending triangle. And correct me if I'm wrong, but I think I can see a descending triangle. Let me check. By connecting these two fractals. Yeah, it looks like a nice descending triangle. That's nice. Give me a second, guys, to put some. So that's the daily chart. So I'm taking you from one time frame to the other because I should have started with the daily, but nevertheless. Okay, October bottom over here, right? Fully recovered the losses that we have seen in the summer. Fully recovered. But it was nice in a smooth, nice uptrend. Can you see how smooth this uptrend was? So that's why I'm gonna put my precious channel just to show me that whether it was on track with a channel or not. And it was indeed. And I think I need to correct a bit the deviation of this channel. Oops, sorry. I think. Okay, doesn't need one. Okay, that looks just fine. You see, that channel though broken on. It was retested initially. That should be Thursday. Yeah, Thursday last week. Friday last week. Monday, I can triple retest over here of the lower line of the channel of the October, November, December, nearly 3 months channel. When once eventually move below it for 2 consecutive days. So is this a sign that the up channel has run out of steam and it's over? This is what you should keep an eye on. This is a very significant breakout down, and thank you for bringing Kiwi on, Werner. Very important breakout. Very interesting to keep monitoring it this week and the next week, because that might be a confirmation that this rally is running out of steam and that we could see a reversal of this 2 months trend to the downside. So descending triangle intraday. So I will get back to the 1 hour chart, actually 4 hour chart. Descending triangle, zoom out. It's on the bottom of the descending triangle. Can you see that, guys? At the bottom, MACD negatively and increasing. So look at that. I will stretch a bit the indicators. Can you see? This suggests that more sellers are coming. You see, increasing lower, extending lower, extending lower. So that means that more sellers are coming intraday. I mean, a 4-hour chart intraday. Oh, I have a lot of questions over. Salman, I just did that. I just did that. Yes, that's Kiwi, New Zealand dollar. We're in a 4-hour chart. Okay, perfect. So let's move back on where we have been. Yes, Kiwi. Yeah. So guys, you see, descending triangle is a bearish pattern. MACD is detaching further. It keeps pointing lower and lower. And lower. I will ignore stochastic. It's for my 1-hour setup, but it's still under pressure. RSI, look at that. It's at 30, not 30 exactly, above 30. It's at 37. But look at that. Lower highs, lower lows for how many days? 15 days, the whole December, and downwards channel for my RSI. So, okay, so the descending triangle is right now retested for 1, 2, 3, 4, 5, 6 session. It was retested 6 times so far. So a breakout of it, either today or tomorrow, sometime this week. We need to find the next support level that goes to 6180. But let's not forget our 200-day period moving average, sorry, at 62.30, somewhere here. So that's the next floor support level, the next support area in general. And if I just, let me just double check something. Swing down, swing low. Let me just check whether I have put that on correctly, precisely. Did I? Sorry, guys. Let me be precise. One. No, that was the correct one. Slower. Oh, sorry. Okay. For those that are interested in a more closer support and resistance levels, this is it. Fibonacci will also help you. So, Fibonacci extension. So, immediate support once, only if the asset breaks and exits the descending triangle only. So 6250, the 100 Fibonacci level, 200 period moving average, 6230. And afterwards, we are going back to November's bottom or the Fibonacci 161 Fibonacci extension. Okay, that's the immediate support levels if and only if it breaks your descending triangle. But if we have spotted pattern, usually it moves within the pattern at least until it managed to break it. So we might see a soft retracement over here until it posts another higher, a lower high, and then turn back again, etc. So I don't know how to draw. I don't know how to draw. I should have learned so for so many years. I didn't. Do have? I don't know how to draw. Nevertheless, okay. If it bounces, we see either a crossing of the fast moving averages or a nice bullish candle recovering, closing at least above this latest bearish candle, etc., then we could expect a top and a retest of the upper line of our trend line. Are we clear? Hopefully we are. I don't see any questions, so hopefully we are. For the time being, it's just consolidating. Okay, so let's move on. Yes, I need to know what is the role of the hedge fund PPI in this market. Are you referring to the PPI indicator, the producer price index, dear Salman? I'm confused. Cambodia, welcome. For our chart, gold. Yes, let's do gold. That was a bit choppy. Choppy. Okay. Found some support as a safe haven, extending gains in the aftermath of Bank of Japan, mainly as a safe haven flows, to be honest, away from dollar towards gold, towards yen, and etc. So that's the daily chart. I'll start with the daily. A nice channel has been seen so far, up channel since the mid of November, okay? And a nice, very decisive bullish candle yesterday, with the fact that it was this, because it was big, it was big enough. It was, you can see how big was it. It confirmed that the bullish bias holds strong for gold. Sorry. So you see Bollingers are pointing higher. The asset holds very, very well above the 20-day moving average since for a month now. MACD steadily positive, not increasing, but it's at least steady, suggesting that slowly there are flows into the gold that hold the gold at 1800s territory. RSI the same, very decent, holding above 50 and actually close to overbought territory between 50 and 70. So as long as we don't see the asset, the RSI turning below 50 with a sharp slope, you need a sharp slope, and MACD turning closer to zero, then the gold expected to remain to hold these gains above the close to 18,000 to 1800 territory. Yeah. So what can I say, guys, for that? Keep the support remains the moving average and the trend line that I have just posted on, while on the resistance, the again the let's see here, 1825. If it breaks, we're gonna have another new high for the channel. So it is a channel. So retracement at the edge, rebounds at the bottom. Retracement at the end, rebound at the bottom. So higher highs, higher lows. Okay, just for those that they might consider trade both sides. Let me just. Okay. And something that's important, that's the weekly chart, okay? So that's something that's very, very important, is the fact that it has sustained for 3 weeks in a row, 4 weeks in a row, above its 38.2 Fibonacci level. So that's why, as in January, I guess that would be in January, maybe earlier, if it enters this area over here, then the outlook for gold is changing. It's changing into a bullish one. But still, we have the sensitivity in the interest rate, so everything will depend on what the banks have to say. But from technical perspective, that would be key because it might retest the 1900s. Okay. Intraday, a bit of a correction, but very small body candles, very doji candles. 1, 2, 3, 4, 5. Very, very doji candles that suggest that this was just a slight correction before a potential extension higher for gold as the overall picture and the daily picture points to a continuation of the upwards channel. So yeah, a reverse though is still a correction, guys. Okay, because as I said earlier, we are at the top area of the channel, so we might see a bit of a correction before another attempt to the upside. So keep an eye on it. If that breaks the 1811, then next floor is 1805 and around 1800 territory somewhere here. Okay, but it's still just a correction as long as it kept within the channel. It's a correction, so you can either consider trading the retracement or trading any bounce away from the bottom of the channel. We did gold, we did gold, we did gold. Oh, a lot of gold lovers over here. We did dollar yen, we did gold. Oh, the correlation between dollar yen and gold. Guys, they are both safe havens. So yen, not dollar yen, yen and gold are positively configured. But if I had to compare dollar yen, I will write something down. Dollar yen and gold USD. Can you see that? You see that? Remember, the first, wait a minute, I will write them down. Can you see where the dollar is in each cross? The dollar sign is first in the dollar yen cross, which that is a base. The dollar is a base currency in dollar yen. In gold, the dollar is a call currency. That's why if we have to compare these two, we will say that they are inversely correlated. So when yen is strong against dollar, then dollar yen goes down. And so inverse correlation with gold, then gold goes up. If dollar yen goes down, gold goes up. Okay? If dollar yen goes up, gold could go down. Okay? Inverse correlation. Are we clear? Is not always the case. Okay? Depends of the sentiment. I mean, but yeah, that's the theoretical the case. Okay, they are inversely correlated. But if we have, that if we have a lot of uncertainty in the market, unfortunately, everyone is shifting to the dollar. So that could lead to dollar again up and gold down. So again, inverse correlation. Yes, inversely correlated there, Salman. Nasdaq, same as that, pretty much steady, very doji, closed dojily yesterday. It remains at the bottom of this week's area. It has broken this floor that we've seen in November and December. It has exited the range and it has breaking it down. So if we see further resume selling on Nasdaq, then the next floor to be watched in the medium term will be October's and November's and down to 10,000 territory. Now, intraday, You see very small body candles, dodginess, sideways movement, but I guess that there are people here that they trading in a 30 minutes chart and an hourly chart, etc. So guys, fractals are the one that I prefer for this kind of time frames. And my fast moving average, my 5 and 9 moving average. So any cross of those two, give us a sign of entrance, trend direction, etc. So my dear Dali, here it is, and you can say, but why you're using only fractals? But it is what it is. I mean, look at that, this beauty. Um, Double fractal, but also just a tad below my Bollingers. Latest fractal, and also the feeling of a gap. So they indeed are providing us are emitting support and resistance levels. So up 11,260, down 11,195. Any breakout of all these could take us to the next resistance level and support level. So if this ceiling breaks, the next top will be the mid of this territory. So somewhere 11,320, 11,318. To the flip side, a bottom brings the very first support level at the Bollingers. Okay, and if Bollingers rejected and the asset exits the Bollingers to the downside, then you should keep an eye on yesterday's bottom, I'm afraid. Let me zoom out a bit. Yeah, we have some kind of a wave, but is it? Let me count it. One, one, two, three, four, five. So that might be an A, but there is long way. Not sure whether it's an Elliott yet. I need to do the maths as well. If it's an Elliott, we might see a bit of a correction lower, an ABC, 1, 2, 3, 4, 5, ABC Elliott. We might see a bit of a correction before another attempt to the upside, but yeah, we need more confirmation on that. The theme, my dear Etali, is that intraday in the 1 hour chart more precisely is stuck within this range, so it needs to exit it in order to have a clear direction. While in the daily, in the medium term, and I will put my usual clean daily chart, it's bearish because it managed to move below, to break this 1 month range, broke it significantly and extended lower. So if we have a resumption, another bearish candle below, moving below the latest bottom over here at 11,139, that could be a potential no potential. That could be that could trigger further selling down to October's bottom. We did gold, pound yen, of course, pound yen, pound yen. Yeah, all of the yen crosses had a significant sell-off because it was a strong yen. That's pretty much it. Kiwi yen, dollar yen, Swiss yen. Massive daily candles. Massive. Let's see. Broken the 50-week moving average. The weekly Bollingers could be a support, a floor eventually. The MACD weekly basis is still positive, but RSI turned below 50. So we have a mixed oscillators in the weekly chart. RSI negative, MACD still positive. So we haven't seen it turn lower, turn negatively. Let's go to the daily chart. Okay, we have something, an M over here, an M formation. That's nice because the breakout of this neckline, and you see that? It looks like an M. Let me put some lines on. I'm not sure how many of you are aware of the M formation or W formation, but this is a, a bearish formation. It's a bearish formation. So broken, massively broken. Broken also the 200-day moving average. Outside Bollingers, so that triggers a sell of an oversold condition. So it might need a correction in order to enter back the Bollingers. So we might see a bit of a reversal higher, just a bit of a correction. But overall, it's in a negative outlook. RSI is at 30, MACD turned negative. So we are waiting for the signal line to also cross lower in order to cover further selling pressure. So yeah, we might see a bit of a correction because it needs to get back to the Bollingers. It's oversold. But if the correction post another lower high, that could be an indication that it will turn back down again with the first resistance at 156.70 and the very next one, if that breaks down to, should be somewhere here. Let's round numbers. Firstly, 155 and 154, because this is an extreme level. That's the immediate ones. Yeah, do you get what I mean, guys? Information, bearish, decisive sell-off outside Bollinger, so it needs to get back into the Bollinger. So we might see some intraday short-lived bounce. But if it's not significant, if it doesn't cover this bounce, if it doesn't cover at least the 50% of this candle, so if it doesn't get back above 62.80, 162.80, if the bounce doesn't, if the asset doesn't bounce back above 162.80, then that will mean another lower high. That means that could mean further sell-off, and that would be just a correction before moving lower. Okay, clear? Oof, a lot of questions, but I have covered the majority of them. Where am I right now? So people just join and they want gold again. Okay. That was in regards to pound yen. Yeah, very dodgy again. Narrow Bollingers, but negative MACD, negative RSI. So intraday, neutral to negative is the case, with Bollingers being the support and resistance levels. I will do once more the oh no, these are old. So okay, I would refresh a bit the gold thing. Or if you have been here, please let me know, because it's a waste of time if I do that again. Thank you very much for confirming that was everything clear, Salman. Thank you very much, because it's quite difficult to do them again and again and again. You know what? Because there are a lot of questions still, I will move to the assets that I haven't covered yet. And for all the gold, the people that they ask about gold and Nasdaq, because I have already covered them, don't worry, the video is recorded and you can just drag and drop at the time when I was speaking about gold, okay, just to save some time, because there have been people that they already watch gold twice. So dollar cat. Dollar cat, okay, good. Dollar cat and oil, let's do them together. We have we have inflation, sorry. We have inflation in an hour and a half from Canada, and we had retails yesterday that they show growth. So Canada is doing quite good, actually. And if I consider the previous reading of inflation, it was a good one. it was a good one. So they show, what am I saying? The retail sales was a good reading, above expectation. It shows some growth in the retail sales sector, but inflation is expected to increase today from 6 what was it, the number? I don't remember it. From 5.8% in a year basis to go to 6.4%. And from that's the year, the headline. And the headline from 6.9 to 7.4. So increased inflation is still the case, even though the monthly reading is expected to come lower. So everything depends right now about the Canada reaction intraday, depends on the inflation, whether it will keep moving higher or not. If it keeps moving higher, that's bad for the Canadian economy. But it could trigger more interest rates from the Bank of Canada. So that could actually drift the dollar CAD lower. So stronger CAD against dollar. If that's just hypothesis about today's results. So it's better to wait for the results to come out. But you should know that if the inflation increased today further, that suggests more interest rates from the Bank of Canada. So that could boost Canadian dollar. So that means dollar CAD could move down. Okay, that's just hypothesis. That's the 1 hour chart. A bit of a rounding up, but steady. Choppiness, RSI is flat. Stochastic is at the overbought territory, quite weak. Nothing interesting. Maybe it's anticipating the results. So I will just help you to get prepared for the results, guys. We are already at 38.2. If we the next levels are obviously on the Fibonacci very well confluence with the latest fractals, right? You see that? So yeah, that's the upside resistance. So if we have a really disappointing data or a really positive data, these are the resistance levels that we are expecting. Now, to the flip side, the support level holds between 20, 130, actually no. The round 36 is key. Not the 20 period moving average, not so much the 22 to 3.6 Fibonacci level, but only the round 136 level. So if indeed inflation comes higher, that could pressure dollar CAD lower as well. So you need to keep an eye on 136, because if it breaks it and it moves below it, then we might expect a new downwards trend for CAD. That's intraday. Overall, let me clear a bit this mess. Very sideways in December, you see, sideways. But the key, what triggers my attention, to be honest, is the cross of the 20 above the 50 simple moving average in this daily chart, because that implies to a near-term increase, upwards move. And considering the higher highs that we have seen, the higher highs that we have seen and the higher lows, that crossing could confirm that it will remain to the upside, okay? And that might be a bit logical, but we need to wait for the inflation to come out. Inflation is the Canadian inflation is the highlight of this week's trading. It was the Bank of Japan and the Bank of Japan and Canadian inflation. Very interesting to watch. Oh, oh my God. Werner, I did kiwi. You asked for it and I did it. I did it ages ago. Why are you asking it again? So I'm moving to oil. Not an exciting asset this week, to be honest. Not a very exciting one. But okay, I mean, it wasn't, haven't seen a lot of volatility, but still we've seen some kind of a recovery, right? So I'm connecting my fractals and that, no, that should be a better one. And interestingly, it broken this pattern just today. We are still at the bottom of the quarter, definitely at the bottom of the quarter. So what I will do, I'm gonna help the intraday traders firstly. So by applying this Fibonacci extension. So guys, as you can see, we had for 1, 2, 3 hours in a row, a nice swing higher, breaking and exiting this range that we have seen, this pattern that we have seen in the daily chart. So breaking it out, moving above the 20-day moving average, but 68.50 remains a resistance area to be closely watched. If breaks, then eyes turn over here. Very important level to be watched, 81.50 and 82. 81.50, 82 is the confluence of a 100 Fibonacci extension, a 50-day moving average, and a bottom back in October. Confluence of these three. So if indeed it breaks this latest high, that could find buying some buyers up to 82, 81.50 to 82. Now I'm gonna move to the oops. Perfect. So that was for the intraday from in general. So support obviously is back to the pattern. So we need a turn below the 20 again. We need to see it turning within this pattern in order to suggest that is back to the downside again. As long as it remains above it, remains bullish. However, the MACD is very, very, very negatively configured. So that suggests that any bounce will be limited. Okay? So a return back below 20-day moving average, a return back within this pattern could turn attention to 71 and 70-20 territory. And if that breaks, then it's pretty much a free fall. Okay, to 60 territory, 58 territory. So okay, let's start one by one. 65, first of all. 65, very close to 200. I haven't put it on properly, but okay, 65 exactly. And this triple fractal at 62. Triple fractal at 62, okay? But that's a long-term view, okay? Long-term. You can have this line on because it will help you, because you might forget in the future. You might see on February that, I don't know, in February you might come to 70. You say, oh, I have these lines on. Oh, nice. So there were some support levels that I found earlier. So that's helpful, but that's up to you. If you're getting confused, then don't put them on. Now, intraday, 1 hour chart. Sharp bounce, bam, 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 overbought. Let me put the intraday basis, sorry, 5 and 9. So boom, 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 overbought. So it needs a correction. However, fast moving average, I keep pointing higher. MACD is still up. RSI is at 64, but fails to extend. Stochastic the same. So we might see a bit of a correction, but as long as it doesn't move below 77 or 76.90 if you prefer, that would be just a correction before another attempt to the upside. So we are waiting a bit of a pullback just as a correction to get back to the Bollingers, but remains to the upside with Bollingers keep pointing higher, MACD the same, RSI close to overbought territory, so positive outlook for the time being. Brent the same, it should be the same, dear. So intraday positive, in the daily, in the medium term chart positive, with expectations to have a limited bounce. Where's my Brent? Brent. Yeah, here it is. Same. Bam, 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 bam. Broken this continuous floor, extending lower. It needs a bit of a correction. So we might see it, you might see it moving like here, like correcting here before bouncing again higher. Okay. You see? But as long as it kept itself above 80.50, then it could remain to the upside for the day. Okay? Salman, thank you very much. ZAR, yeah. Frank, very interesting to point that out because emerging markets have affected significantly with what happened from Bank of Japan. Why? Emerging. I was reading somewhere. Was it in Financial Times? Where was it? Okay, I don't remember. But what I'm trying to say, let me find first the ZAR. Emerging markets have found they have affected significantly because of carry trade. Okay, so a lot of carry trade happened. A lot of carry trade is what we have seen. Oops, let me just change this. Yeah, but that's dollar ZAR. Let me show you ZAR yen firstly, okay? Have you seen there has been a massive volatility in the emerging markets that are yen crosses, like ZAR yen. Sorry, I'm not showing dollar ZAR right now. I'm showing ZAR yen. Have you seen how massive these candles are? A lot of volatility, a lot of carry trade is what happened in the last few days after Bank of Japan, because what they did by controlling the yields is that they helped the government bonds getting more attractive. So people, especially, try to carry trade emerging markets with Japanese market. That's why this is happening. A lot of volatility the last 2 days, as it caused a lot of carry trade between emerging markets and ZAR and yen. Okay. So yeah, okay. I will get back to what you asked. Sorry, dollar ZAR. Sorry, descending triangle with a flat floor. This is what we have seen from. I will put a straight line because I don't like the dotted one. Sorry. It's not straight, but I cannot draw. Sorry. So yeah, descending triangle with a nice sorry, I'm not good in drawing, but okay, you get the point. So descending triangle with a flat floor, that could be a very bullish pattern if we see it extending higher. If we see it breaking the floor, obviously will be a bearish one. But the fact that we have seen MACD eliminating its negative bias adds more to the bullish scenario rather to the negative scenario. I'll get rid of the stochastic is for the 1 hour chart, so I don't want to confuse us right now. Okay, so have you seen that? Okay, RSI is still at 50 or around 50. Okay, we don't have a confirmation about the change in the MACD, consolidating around 50, adding to this movement within the triangle. But there was an insignificant improvement of MACD. So you see some appreciation and some change in the sentiment. So, okay, what we need right now is confirmation. We need the MACD to turn positive and the asset to break upwards the channel. So if that happens, then attention is turning to this latest high over here, or even to this triple top back in October. We need confirmation. No, now nothing is certain, especially as we are in the year's end. On the flip side, this remains a strong floor. But as long as the asset doesn't break the floor, then it will remain within the channel. So you can either consider trading on the retracement in a once it testing the upper level, you can trade on a potential retracement or a bounce away from the bottom line. But that's it pretty much for the daily chart at least. 1 hour chart. What we have a lot of consolidation. This is it. I will put the 4 hour. We have a lot of dodginess over there. So floor, doji candles. Well, there is a lack of direction over here, guys, both in the 1 hour and in the 4 hour, I'm afraid. My MACD over here is a bit delayed, so I will detect it to 533 to is it better right now? Positive, drifted, bump, up. Okay, that looks a bit, okay, it's giving some very, very fast signals, but at least it looks much better than the previous one. So we have over here is MACD being at 0. So we need to see either turning back down again, or we need some massive candles that suggest a rebound. If that happens, along with RSI turning above 50, that could turn the attention to 1756 and 1750. Okay? Oh, I missed this question. Dollar index. Sorry. Dollar index. Let's move on to dollar index. That was the lines that I had yesterday. Sorry, let me get rid of them. Oops, Control Z. Sorry. I don't want to get rid of the channel. I want to get rid of the dollar. Never mind. Okay. Decline. Clear downwards channel. No, I want a tighter one. That is too wide. No. That's better, much better. But I will keep both. You know why? Because it gives you a resistance range and a support range. So you know that if it breaks this first line, it could go up as high as the second line. If it breaks this bottom line, it could go as down as a hexagon line. So it gives you nice ranges. So different way to find support and resistance levels, guys. There are so many ways. There are so many strategies. They have so many. There are so many things that you can do. So many. I forgot that I have people in the go to webinar as well. Sorry, guys. Yeah. So obviously in a downtrend for the whole November and December. Actually, that was the case since October, losing a lot of steam simply because all the moves of the Fed have already been priced in. The market's already priced in some moves, some hikes. So that's mainly the reason. So what we have for dollar for the time being is a potential continuation of this downtrend. MACD, you see, you cannot see. MACD, can you see steady, negatively configured, no indication about the reversal, no nothing, just remains well below zero. RSI, again, steady, close to 30. There is no hint over here that it will turn back to 50 or something. No, just steady to the downside. What we having over here? No, cannot be confirmed. No, that's nonsense. The only thing that I have is a range of RSI. So you see, steady, bouncing between 30 to 43, 30 to 43. So that the both indicators, along with the channel and the fact, and this interesting bearish cross of 50 exponential and I think the other one is 100, isn't it? Yeah, 50 and 100 moving average. Okay, and the fact that they keep pointing downwards. It's just an indication that we are expecting further decline for dollar index in the medium term. And if you have a closer look, you're going to see that my 20-day moving average also crossed 4 days ago, 5 days ago, below the 200. So that's another indication that at least for the next few days, few weeks, dollar will remain in a downwards trajectory. Intraday, we have some corrections back to 103.83. What can I say? 104 remains a psychological level to be closely monitored. A break of it, somewhere here, break of it could bring the asset as high as 104.50. That's it for now. That's it for now, I'm afraid. Uh, guys, if there are no further questions, I'm gonna call it a day. I think I covered everything. Gold, dollar yen, dollar CAD, Kiwi, ZAR, Dow, Nasdaq, Bangladesh, welcome. HP, what is HP? HP. Don't worry if you have just entered. Guys, for those that they have just entered, don't worry. In Facebook, in YouTube, in LinkedIn, in Twitter, it is recorded, so it's saved. Once I close the session, you will see again the video, so you can drag and drop it, and you can watch the asset that interested you. Because many people were asking again and again about gold, about dollar yen, about Nasdaq. Don't worry about it. As soon as I close the session, you can go down, drag the that thing at the bottom. So I don't know the word, and you can go to the asset that you want to watch. You don't need to watch the full 1 hour and a half live. Just drag and drop it and check the asset that interested you. Yeah, I've covered everything. So I'm sorry that I cannot get back, but it's getting too much. I'm already run out of steam, and some people have been here from the very first minute, so I cannot go again to do the same stuff, because otherwise we end up with 2.5 hours live streaming. Yeah, very important to keep an eye uh, uh, on stocks. Very significant for the future. Dollar yen, we have a strong yen, we have a higher gold, we have ceilings, key ceilings for stocks, Nasdaq, Dow Jones, etc. I have covered all this. I have explained it briefly. But anything you need, we are here to help. Don't hesitate to contact us anytime through social media, Facebook, YouTube, LinkedIn, Twitter, email. You can find us you can send us an email at webinars@hfm.com. Okay, it's me, Stuart, that replies and support team if we are not here. But if it's anything that had to do with analysis and you're struggling and strategy or something that you did wrong and you don't know what it is, they pass it to us. So if you have any question, if you're struggling about anything, let us know. Send us screenshots and etc. And we'll try to help. Okay. Foza, please. You want to deposit? I don't know whether you have an account or not. You have a wallet or not. Our agents will be able to help you. Because depends in which place of the world you are. Please contact your agent, or if you don't know your agent, just we have a live chat on the website. Just and people are 24/5 here to help. Okay, have a great day ahead, guys. Take care. We have the Canadian inflation in an hour and the consumer confidence from the US in 2 hours and a half from now. So that this is the spotlight data of the whole week. I'm referring to the inflation from Canada. I explain why that's it. If we see an increasing inflation, that means that the Bank of Canada hasn't done much, so they need to increase interest rates more, or they need to do something else to control inflation, and that could be positive for CAD but negative for dollar CAD. If we see, however, Canadian inflation slowing down, that means that they have done already enough and they don't need to do further. So that would be negative for the cross. That's it. Oh, Salman, you've been 1 hour and a half here. Hopefully you find it helpful. Thank you very much. I will keep as soon as the new year comes. We're gonna try to do more lives. We do already some reels in Instagram, and we'll try to do at least 2 live streamings. So hopefully. So have a great day ahead, guys. Take care. Happy holidays for everyone that is celebrating Christmas, or Happy New Year for those that they don't celebrate Christmas, but it's the new year, and the new year is coming, so it's holidays for everyone, right? For celebrating the new year. So take care, and I'll see you again soon. Thank you. Bye-bye.